Hey everyone, I'm back with another Orange County housing market update where we're going to be taking a look at the most recent data for home prices, mortgage rates, buyer demand, supply of homes for sale, and just in general discussing why we haven't seen prices drop, despite the fact that the housing market has slowed down considerably. And if you're following the housing market, you've probably seen or heard a lot of people talking about home prices crashing. And it's important to keep in mind that home prices and housing markets are extremely local, so you can see some pretty big variations across the country in what's going on. And so when you're hearing people talking about home prices crash, they're most likely referring to areas like Florida, maybe Austin, Texas, Phoenix, Arizona, markets outside here of Orange County. So what we're going to do in this video is really describe and explain to you what we're seeing in Orange County, because if you are thinking about buying or selling a home here, it's important that you know what's going on in your local market, and less important, what's going on in other markets or the national housing market in general. So if you enjoy watching this video, I would really appreciate it if you hit the like button and subscribe if you like to stay up to date on the housing market in Southern California. If you are thinking about buying or selling a home here, I'm more than happy to help. My name is Tim, and you can find all of my contact information in the description below. You can also call this phone number here and get a hold of us that way. This is our office number, so you're not going to get very far if you try texting that. First, we're going to be talking about why home prices aren't crashing in Orange County. And in his most recent Orange County housing report, which we're subscribers of, a local economist named Stephen Thomas lays out three key indicators that need to be present for home prices to crash. And so those three indicators are: first, an oversupply of homes for sale; second, an elevated number of distressed sales, so that would be foreclosures and short sales; and third would be weak demand. And so of those three indicators, we're currently only seeing one of those in Orange County, which is weak demand. And so we can put up a graph of demand here just to show you where we are compared to the past few years and compared to 2017 through 2019, the average demand level for those years. And if you read Stephen Thomas's report, which you can get from me, if you're curious, I'm happy to send it to you, you'll see that quite often he references 2017 through 2019. Those 3 years he kind of uses as his metric for a normal housing market. These were the last 3 years before COVID, before interest rates got slammed down to historic lows and the housing market went crazy, prices rising, and then subsequently interest rates rising, creating a bit of an affordability crisis. And so obviously that has hurt demand. And so looking here, the demand numbers from 2017 through 2019, the average was 64% higher than we currently have today. And so this year through June, there's been 31% less closed sales compared to that same time period. And so you can see that demand is relatively weak compared to what would be considered a normal housing market. And so that is the one metric that is currently being fulfilled in Orange County, is weak demand, and that's largely because housing has become so unaffordable due to high home prices and high mortgage rates. And then moving on, we can see, the first one we talked about was an oversupply of homes for sale. So let's take a look at the number of active listings in Orange County today. And so you can see that the supply of homes has been growing, and it's grown considerably this year, but it's still far below the number of homes on the market we saw preceding and during the Great Recession. And so we currently have just over 5,000 homes on the market in Orange County, according to Stephen Thomas. In July of 2006, we had 15,735 homes for sale, or 210% more. In 2007, we hit 17,596 homes on the market, or 247% higher, which is more than triple than what we have on the market today. And then so lastly, we'll take a look at distressed home sales. So this is foreclosures and short sales. In June, there was one foreclosure sale and one short sale, and that was 0.11% of the total 1,828 closed sales in June. And so going back and looking preceding and during the Great Recession, we had 4% in June 2007. Then that jumped up considerably to 33% in 2008, 43% in 2009, and 38% in 2010. So, if you were, alive and watching the housing market during that time, you remember just the great number of foreclosures and short sales that were going on. That was people who could no longer afford to make their mortgage payment, or simply they had lost so much equity in the home that they decided to simply walk away and give the home back to the bank. And the reason this number is so important, the distress sales number, is because banks are unemotional sellers, right? They get these houses back from the people who purchased them, and they just want to get them sold as fast as possible so they can redeploy that capital back into other things. Banks really don't want to own homes, so they sell them as fast as they can, and they're really not as concerned about the price as your typical home seller would be. So now that we've covered why home prices currently aren't crashing in Orange County, we can go ahead and take a look at what home prices are doing. And we're going to start here by looking at the median home price for single-family homes, condos, and townhomes in Orange County. And we get this data from InfoSparks, and they get their data directly from the multiple listing service. So the median home price in July dropped to $1.2 million from $1,250,000 in June. So quite a big drop, $50,000 or 4%. Now, it's important to keep in mind that the median home price really isn't the best metric to look at if you want to know what's going on with home prices. I like this data because it comes in very quickly, so we can see what happened already in July. But the most accurate way to look at home prices is to look at home price indexes. And so these are a little bit slower. So for these, we're looking at data from back in June. And so we're going to start with the Zillow Home Value Index for Orange County. And they have home prices down 0.47% on a month-over-month basis in June. But home prices, according to them, are still up 3.22% year over year. So despite the fact that we are seeing home prices drop slightly on a month-over-month basis, we're still up on a year-over-year basis. And that's important to keep in mind because it is fairly normal for home prices to start dropping slightly on a month-over-month basis moving into the end of the year. We see most of the appreciation during the spring and summer markets, and then it is common that prices start to taper off. And so we can also look here at the Freddie Mac Home Price Index. Now this is for a larger metropolitan area. They define as Los Angeles, Long Beach, and Anaheim. And so they have home prices down 0.51% on a month-over-month basis in June and up 0.92% on a year-over-year basis. And then finally, we can look at the FHFA, which again, they define kind of our region as a metropolitan area of Anaheim, Santa Ana, Irvine, and they release their data quarterly. So on this, we're looking as a comparison from the fourth quarter of 2024 to the first quarter of 2025. They have home prices up 0.86% and up, that's on a month over month basis, and up 6.05% on a year over year basis. So basically what we're seeing here is that home prices have really stabilized. They're not going up at the record levels we were seeing in previous years, and they're really not dropping substantially. I mean, these month-over-month declines, as I mentioned, are fairly normal for this time of year as the housing market is seasonal, and we're still seeing home prices are up on a year-over-year basis in Orange County. And then we can also take a quick look here at Zillow's home price forecast for some of the Southern California counties. So I'm not sure how much weight I put on this or you'll put on this, but it is just interesting to mention. So they don't have Orange County specifically, but they do have Los Angeles County, where they're expecting home prices will be down 1.3% on a year-over-year basis in June 2026. And for Riverside County, they have home prices down 0.9% in June 2026. And lastly, we're going to take a quick look at mortgage rates. And so this graph is showing the 30-year fixed rate mortgage from Mortgage News Daily. And their survey assumes that the buyer is not paying any points or fees to get the loan. And you can see that rates were hovering around 6.75%. and recently they've dropped and are now sitting just above 6.5%. And the reason for this drop is because we recently had a revision to the jobs numbers, and this indicated that the economy was weaker than previously thought. So this is making it much more likely that the Federal Reserve is going to cut rates in the future, and so rates tend to move ahead of what they anticipate the Federal Reserve will be doing. So it'll be interesting to keep an eye on this. If the Federal Reserve does decide to cut, a lot of times that number is already baked into mortgage rates before the decision is made. But if they decide to cut rates more than what was expected, you could see a further rate drop. And this would really be helpful in terms of affordability for buyers, making homes more affordable, and also for sellers. When rates come down, that tends to give a nice boost to buyer demand, and that can help you get your home sold faster and possibly even for more money. Thank you for watching. If you have any feedback for me on these videos, I'd appreciate it if you left a comment below as far as which segments you think are the most useful or helpful to you as someone who might be thinking about buying or selling a home. And also, if there's any data or information you think would be useful to you that you want me to cover in a future video, leave a comment below and I'll see what I can do. If you liked the video, please hit the like button below and subscribe if you like to stay up to date on the housing market. Have a great day.